welcome to another session in our ongoing series on OneSource tax provision functionality. We're going to talk about reporting today, and I'll probably say this one's a little bit of a doozy. The goal in this session is really to walk through, our what I think of as our key reports. So it's the tax provision, the effective tax rate, the deferred balances, the payable, and just basically walk through how data kind of flows through these different reports from one to another. So I'm not really going to work in the software. In this instance, I've actually downloaded a series of reports, and we're just kind of going to step through them bit by bit. So we've got our federal provision, state provision, and the ETR report. Then I'm kind of following, and those are what I like to think of as my income statement type reports, right? And then we've got our deferred rolls and our payables, so our balance sheet type reports. And I've got a variety of reports. You'll notice that I've got a deferred roll. I've got the Fed pre-tax. I've got the deferred roll Fed, that's Fed tax affected, Fed plus FBOS, because my this particular data set is set up where the federal benefit of state attaches to the federal. I've got a deferred roll for the state, and then the Fed payable and the Fed state. So depending on what we are trying to kind of walk through, we need a variety of different reports, especially on the deferred side. And I've not delved too much in the state because that becomes a little trickier to find things, and we'd probably be here all day digging into that. But we'll cover some other state reports in a different episode. So anyway, I'm starting out with our deferred provision. If I take a look at my skipping our pre-tax book income, the deductible state tax. That's that piece that when we calculate our state taxes, we can deduct on the federal, especially in the United States, where we're allowed that deductibility. So if I just click on that hyperlink and jump to it, you will see it's coming from my state tax provision, and it is literally my current state tax provision number, and that's feeding my federal taxable provision. Going down the I'm going to skip this tax affected side here and take a look at my total temporary differences. So when we start looking at our deferred roll forwards, we often kind of want to see how things kind of feed. So if I select this, because it's a pre-tax number, I have this linked to my deferred roll forward federal pre-tax. And different from the state, because of course we would have state adjustments possible. But if you run the pre-tax report, that's the deferred pre-tax report in the software, it is only federal temporary differences, gross temporary differences. So that would be your regular temps that show up on that tax provision, and that's my number here in current activity, plus NOLs if you happen to have any. So I happen to not have any NOLs that I either generated or utilized on the tax provision. So my 50,159,000 ties to this temporary number here. Had I had some NOLs, I would have had to add these two numbers together to get it to tie to my deferred roll forward federal. Now below that, we start getting into our tax affected items. So our after tax temp differences, if I select that, is going to jump me to my deferred roll forward federal. Now, this is the income statement view of the deferred roll forward. And the reason I am walking through this particular report instead of the tax affected balance sheet view is because this particular income statement review allows me to see the pieces of my activity through the deferreds that had to do with P&L. And that's what I want, because I've got some tax affected items that ran through activity and possibly other things. So that's why I'm using the income statement view. So you will see that my after tax items They're all in my current activity column because they are current deferred flips and they are showing up on my federal provision as well. Now, my return basis provision, that's my total calculation, right, of my overall tax provision. Where's that going? That's going to go to a variety of places. So if I click on this hyperlink, I will see that now that flows through as part of an automated posting, and that goes to my my federal payables. All right. I also have a couple other things here. The auto posting of non-cash items and auto posting of the return to provision. And you will see I have those two linked here as well. Not all items you see are flowing through, and that's because of how these non-cash tax adjustments are set up. We have another session that we talk about how to get your non-cash tax items that are not set up for automatic posting to flow through to the receivable payable. And for this particular one, the withholding, we did do that manual setup to get it to post, but these other items we did not want to post, so they're not showing up. Okay, our deferred provision will come from this area in my deferred role. So because my federal benefit of state is attached to my federal calculation, that number is inclusive. So I have to run my Fed plus Fed benefit of state report to see it. If I was to run my federal and try to look at that, you'll see my federal number is 701,400 by itself, which would be incorrect because it does not tie to this number. Had my federal benefit of state attached to my state deferred, then I would have been able to use this number, but I can't in this instance. So it's attached to my deferred provision. You'll notice I also have highlighted the beginning balance, the balance sheet adjustments, and the ending balance number. If we go back over to the Fed provision, you will also see that I also hyperlinked those because on the tax provision, the calculation of the actual income statement portion is done by taking the balance sheet, and that's the 38 million there, then adding back any balance sheet only, and then subtracting out the ending balance to get to the deferred tax expense number. All right. Our state current provision, you will see this 2.853 million is going back again to our current state provision number. And if I was to kind of go back to my Fed provision, you'll notice that that 2.85 also matches my the amount in the deductible state tax. So that's telling me that all jurisdictions at the state level have been set up for deductible tax. Sometimes if you're running your consolidated group, you potentially have entities there that do not have their state taxes or local jurisdiction taxes deducted on the federal calc. So it's possible that this number may not match your state number below. Your state deferreds is gonna come from, it's the same number that's here on your total state deferred tax provision. And if I click on that, that's now going to my total deferred provision on my income statement view of the state. And similarly to the federal, we also have the beginning balance, the balance sheet only, and the ending balance, which if I take a look at my state provision will show me the calculation of the actual state expense. Let's see. Okay, so before I hop back over, if I open this area up, we've got some equity adjustments. You will see that this number, the equity adjustment on the federal prov, will switch over to the state side as well and shows up here. And we also had similar equity adjustments on the federal as well in this area. And this is simply the reversal of a permanent adjustment and a cash tax adjustment that were put in as equity and not P&L. So it's being reversed out of the actual tax expense, while allowing it, because it's included in this number, while allowing it to go to the receivable payable. So how does this all come together now on our ETR? Now that gets a little bit trickier. And in this instance, I'm really focusing on the ETR just from the contracted view of the state, not with the state breakdown. And you can see my pre-tax book number is going to tie to my pre-tax book number that's listed here. My current provision, my deferred provision, we know where all of those came from, right? They're rolling back from your state prov. The deferred, of course, is coming from, this area, which we've also seen is coming from the deferred roll forward state as well. And then below, we've got the federal benefit of state of each of those, which is what those calculations are. So I kind of bypassed the difference area earlier. And that's because on the face of the federal provision, you get to that number by simply tax affecting your PERMs at whatever the rate is for the entity. This entity has a 21%. Now, if I was to multiply the 354 by 21%, I'd actually get something around the ballpark of 74 million. But because the stock options that I mentioned earlier are also, they're equity, they're not P&L, they do not show up on the ETR because they don't have an impact on tax expense itself. So hence the overall tax effect of that is the 72 million that you're seeing here. My tax adjustments are coming over again from my federal, which is really just a combination of my my 35 million and then the sum of all of these others as well. It's kind of getting me to my my tax adjustments here. And that excludes equity because I did have a tax adjustment listed, that 150,000 that is entered as an equity adjustment. You can see it here. So if you'll notice, the description on the permanent differences and the tax adjustments includes X equity. So it means that it does not include any of our equity adjustments. This view is also an expanded view. So I mentioned I did not do an expanded view of the state, which would have listed all of the PERMs for the state and the temps as well. But this is an expanded view because it kind of brings in some columns from the income statement view of the deferred report, those pieces that impact the P&L. So if I just kind of scroll down to the bottom, I have 484,000 that's coming from my effect of deferred rate changes. And if I select that, you will see that is coming from this rate impacting column B column, 484. And what that is really is the fact that on the deferreds, we have a different ending deferred rate than we do on the current provision. So the current provision, when it's calculated in the deferred, uses the same rate that it uses on the Fed provision. So the understanding is that current deferred flips do not impact P&L. So with that being the case, this is designed to not have an impact on P&L, but we still have to true up that activity that we booked using a different rate. So this is the piece to get it to our ending deferred rate, which then does generate a P&L impact. And for that reason, this is included in our overall rate impact, whereas the sum of the current and everything else is included in our total deferred provision. So if I sum all of those up, that's my 701,400, but the actual rate impact is these three columns, which is 3,015,000. All right, so The next column that will show up on the effective tax rate is the deferred only adjustment, which is here. And that will include things like your any kind of write-offs possibly that you may have had, or any return to provision, true-ups, etc. Those will be in that particular deferred only adjustment column. All right, and this is just kind of looking again at the federal and state, just to show the things that automatically come over from other reports. And that's it on basically how key information runs through all of the different reports. I hope you found this useful, and I look forward to seeing you on another session.